Hello there! Thank you for grabbing my new training. As you're about to discover, making money from crypto is not as hard as it looks. In this training, I will be showing you 2 easy methods to make money with crypto. But first, please go through the bonuses that I provided. They will teach you the basics before we get into the crunchy part. These bonuses will show you the basics on how to buy coins, how to use TradingView and work with price charts, and how to understand indicators and oscillators. After going through these priceless bonuses, start your training below. I wish you all the success you want and deserve, and most importantly, have fun making money. Now, the easiest way to find coins that are about to launch is quite simple. I'll take Binance as an example, but I'm pretty sure that pretty much every exchange use the same technique, and they let their customers know before it launches, right? So in my notification section in Binance, in this example, I've got notified a couple of days ago to trade Rare at 6 a.m., blah, blah, blah. So obviously, when a coin launches on an exchange, you never buy the same day, okay? And I'm going to be showing this to you throughout the training when to actually buy coins. But for now, what's important for you to know is that in any good exchange, you get notified about upcoming coins. So let's assume that Rare has launched. What you want to do is go in TradingView and create yourself a Rare chart. What I suggest you to do is wait a couple of days, like 4, 5, 6 days, and then make your chart. To make a chart, you just need to go on TradingView, select chart, and then you want to type in whatever coin you want to do. So in this case, I'm saying it's Rare for this purpose of the video. And I want to make sure that it's in USDT. So it would be here, as you could read, Rare USDT. And in my case, I'm using the Binance platform, so I would select this one. Now there's other coins where you'll see all sorts of platforms here. So you really need to make sure that whatever coin you're using, you're selecting the one that is matching your exchange, right? So in my case, I use Binance. So, I would select Binance. So once your chart is created, all you need to do from that point is monitor it. And this is what I'll be showing during the next part of the training, how and when to get in to make profit as soon as possible from a coin breakout. Please move on to the next part of the training. Now, the indicators and oscillators we're going to be using in this training is the Williams trailing stops, the EMAs, and your EMAs, you want it to be your 5 EMA, 20 EMA, 50 EMA, 100 EMA, and 200 EMA. You could set the color of your lines how you want. That's up to you. But you need to have these EMAs. And as for the oscillators, you need your stock RSI, your RSI, and your MACD. So now that we know which indicators and oscillators we're going to be using during this training, we can now begin. So rule number 1, never buy on day 1. Here's why. On day 1, people all buy, the candle goes positive, a lot of buying pressure, and during that same day, there's most often a dump. And then, here's what happens, right? Things go down. So if you would have purchased here, you're going to have to wait a while for it to go back up and break even, right? And just to show you, things keep going sideways. And this leads me to rule number 2. You want to have a bit of data. So whether you start seeing a Williams trailing stops triangle, or whether you start seeing EMAs, this is additional data that you're going to get. Now, in this particular part of the training, I'm not going to be talking of the EMAs. I'm going to be talking about this in the next video. So for now, let's just focus on the first big candle that dumped and the sideways market that we're seeing in this example. So just to limit the confusion, I'm going to turn off my EMAs. As you can see, we're going sideways in this example. So what you want to do is grab the highest tipping point of your sideways market and the lowest tipping point and draw a little box. And you also want to draw a resistance line on the highest candle. Now, in this example, as I was saying, this is the scenario where there's a big dump at the beginning and a ranging market that follows, right? Your resistance line needs to be, in this case, it's $5. And now my resistance line has been drawn. And now all I need to do is wait for a breakout. Now, in this scenario, there's 2 two places that you could actually enter and buy coins. Because we're ranging sideways and we're far from the resistance line that we drew, there's wiggle room here if we break out for you to make a little profit, right? Now, obviously, you're not going to get 10x from this, but I still wanted to show it to you so that you understand that in this scenario, you could actually enter twice. So let's assume that we break out to the upside. Okay, so what you're going to want to see is a candle, whether it's green or red, to close on top of your box. Okay, no matter where it is, you know, like it could also be later here, you know, you never know, right? But what you want to wait for is a candle, whether it's red or green, to close on top of your box. And once you see this, that's when you're going to want to buy coins and take profit just before we hit your resistance line. So see, in this case, you would have made a 40% profit, which is still very good, right? So why would you exit before the resistance line? Simple, because things could hit the resistance line and go back down, right? So you want to take your profit before it hits the resistance line. So that's a little profit you could have made before we even have a true breakout. Now, the true breakout you're after, obviously, is when it hits above your resistance line, because that's your highest point. So if you have a candle that fully closes above your resistance line, you're going to want to buy some coins and let the coins go up. Now, one thing you need to understand, the longer the range, the bigger the breakout. Now, for sure, things could decide to go down, right? So this would not be a good time to buy, but what you're looking for is the breakout to the upside. This is where the money is in this example, because big dump, sideways market, breakout, boom. This is when it's going to hit. So I'm waiting that it breaks out here in this example. Now, this is the rare coin, R-A-R-E. It's a new coin as I'm filming this video. As you can see, there hasn't been many days of data yet. We barely even have EMA data here. As you can see, the lines just started. So what I'm waiting for in this example is that it breaks out, because we're going sideways after a dump. So if we manage to break out from the original highest tipping point, then I know that it's going to go up. Now, obviously, it doesn't happen all the time. But if you put, for example, $100 on each of these coins, and one of these coins gets a 10x, it's going to cover a lot more than all the other ones you may have lost along the way. But bottom line, if you get a big dump, it goes sideways, and it ends up breaking out from the original highest point, that's when you want to put a bit of money on that coin. So now that you understand this scenario, please move on to the next part of the training. In this scenario, we're going to take Solano because as I'm filming this video, Solano broke through immensely lately. So from the starting point, as you can see, it went up, went down, went sideways. So there's a bit of everything. Now, the first thing you want to do is spot your first level of resistance with the Williams trailing stops. Because at one point, when you see something like that, there's data. So the Williams trailing stops start appearing. So what you want to do is draw a trend line on your highest Williams trailing stops resistance. Okay? And then, obviously, you want to look for a possible breakout, right? Now, you'll notice here that my 5 EMA crossed my 20 EMA, crossed my 50 EMA, crossed my 100 EMA. For a lot of people, a cross is a bullish sign. Yes, I could have entered here and bought some coins and tried to get a profit right below the resistance line. I would have made 100% profit, okay? So, just like in the previous video, but this time with EMA crosses, I could have entered early, bought some coins, took my profit at the resistance level, and wait to see that there's a true breakout or not above my resistance line. But here's the thing. EMA crosses can go in different ways. And just look here. The 5 EMA crossed the 20 EMA, then it crossed back down. So, you know, the price movement is so fast on the little EMAs, like the 5 EMA, the 20 EMA that cross, that this would be something I would do if I would be trading with leverage or margin trading or futures trading, would try to scalp. But with this method, you can, wait that at least your 5 EMA crosses your 50 EMA. When your 5 EMA crosses your 50 EMA, this could be a good bullish sign. So you could buy coins, and as I said, take your profit before hitting the resistance level and then wait for a true breakout on top of the resistance line. So here's something very important that I did not show in the first scenario, and this is called confluence. Let me show you what I mean by this. Now, you'll notice that my stock RSI, my RSI, and my MACD are all pointing up as a sign of bullishness at the same time. So if I align on the February 2nd, everything is aligned and bullish. And here in the stock RSI, you'll notice that we are in the overbought. Normally, we would say, if it's overbought, people are going to start selling. But because I'm working with confluence, I'm also going to look at the RSI and the MACD. The RSI is telling me that we're above the 50 line, which is bullish. The MACD is above the 0 line. The histogram have green bars. And if I zoom in, you'll notice that the signal line crossed the price line on the 31st of January. So by the 2nd of February, we were in an uptrend here. As you can see, the MACD lines are pointing up. So we got confluence here that it's bullish. We got confluence here that it's bullish. We got confluence here that it's bullish, even though we're a bit overbought. So this here happens on the 2nd of February. So let me go back here. 2nd of February, the candle closes above the resistance line. So this means that my entry is going to be on the open of the next candle, which is above my red line. So I would enter in the candle that has a circle here, because this is where I had my confluence previously. So I waited that the candle closed and I entered right away. No matter the color of the candle, it could have been a red candle, it doesn't matter. Okay, so as long as you have a candle close above your resistance line and that you have confluence with your stochastic RSI, your RSI, and your MACD. Now, about the MACD, I spoke about a cross here. It doesn't necessarily have to have a cross, but the cross is an extra sign of bullishness. What's important in the MACD here is that it points to the upside, right? So when you have all your confluence, you wait that the candle closes and you enter as soon as the previous candle closes. In this case, it would be here. So let me show you what happened from there. I gotta zoom in again because it keeps going up and up. Let me show you where we entered. So just look here. All of that up until February 2nd, we said. See, I entered here. Okay? So let's just calculate how much percent profit this is. $4,792% increase from the point that we had confluence and I got in, right? So this means almost 50x profit. Obviously, this does not happen every day. So this is why I'm after the 10x profits, not the 50x profits. But it's just to show you that when you have confluence, the chances are that it is going to go up. Now, how much is it going to go up? I don't know. I'll be talking about taking profits later during this training. So for now, please move on to the next part of the training. Now, the easiest way to monitor when there's a breakout is quite simple. You always set an alert in TradingView above your resistance line. The breakout point would be $5. So I would go in TradingView, click on the clock here at the top. In scenario number 1, I was talking about rare. So you want to make sure that you're using the right coin, that it's crossing, and the value, in this case, is the value of the coin. So I want it to cross $5, and I want to get notified only once. Once this is done, you want to make sure you have a check mark everywhere here, for your notify on app, show pop-up and send email. You click create and your alert is right on it. Now, I'm just going to remove my line. You could see the alert is right on it. So when it reaches $5, I'm going to get an alert. So now my alert is done. I could even remove my resistance line. And when it's going to cross, you're going to get notified. Now, in scenario number 2, I was using Solano as an example. Now you'll notice here, there's a resistance level here, a resistance level here and here. But you still want to make sure that you want it to cross the highest level of resistance. So in this case, I would want to put my alert at the top of my resistance line here. So strange enough, it's the same price, $5. So I would click on my clock, make sure that it's Solano, crossing value $5. Once, make sure that I have my 3 check marks here for the notify app, show pop-up and send email. Click on create. And if I move my line, you see my alert is here. I can even remove my line as I was saying previously and just use this as my resistance line at the same time. So it's as easy as that to get notified, because remember that in time, you're going to see a lot of new coin launches. So you want to get notified when they break out. You don't want to have to go and look at it every, day or whatever. So if you set yourself some alerts, it's going to be much easier for you to keep track without having to spend too much time looking at charts for them to break out. It's preferable to look at charts that are fresh and that you set up your alerts, and that when it hits the alert, then you take a decision whether or not you buy the coins or not. So it's as simple as that. Please move on to the next part of the training. There's a gazillion ways to take profits, but I'm going to show you the easiest method that I use. And for beginners, this is very often the safest way to take profits. So you'll notice here that I have a cross where my 5 EMA crossed my 20 EMA. Here, my 50 EMA. Here, my 5 EMA crosses my 200 EMA. So you'll notice that when there's a cross, very often there's a dip. What you want to look for is confluence. Let me show you. So here, you'll notice that in my stochastic RSI, we went from overbought in the box and we're not yet oversold, and at the same time in the RSI we're below the 50 line and pointing downwards, and in the MACD there's a cross to the downside, and after that we've noticed in the histogram that we were in a downtrend as well. So this shows that there's confluence and it would have been a good time to take profits. Now the same thing happened here. Once more, in the stochastic RSI, we went from overbought into the box. In the RSI, we're below the 50 line and it's pointing downwards. And in the MACD, we got a cross and we're below the 0 line. So once more here, I have more confluence. But here, you'll notice that I didn't have confluence very much. I mean, we went from oversold into the box. We didn't go into the overbought. So that's not really something I would count. Here we're below the 50 line in the RSI and we're below the 0 line in the MACD, but there's no cross to the downside. So not much confluence, but the 5 EMA had crossed the 200 EMA, which is also another bearish sign. So if you add it all up, you had 2 crosses with confluence, and then you had a bearish sign of the cross after that followed. So a good place to sell obviously is when you get confluence. So I'm talking about, here and here, right? So if you would have seen these signals, you would have known that it was time to sell. Now there's another method also that you can do. I'll show you in this example, going back to Solano. You'll notice at one point everything was bullish. All my EMAs are in the correct order, pointing upwards. So I could have said, well, I'm not going to sell until I cross the 100 EMA or the 200 EMA. In this scenario, everything played out well on the 200 EMA. But overall, crosses, confluence, or your big EMAs. That's when you want to take profits. Thanks for watching.